Bitcoin order book data is revealing a developing trend, and that, my friends, is exactly what we are going to look at today. Hey, guys, it's Keith Allen. I'm back, and yes, today I am going to make sure that I'm sharing the screens that I'm trying to share with you. Yesterday, a little bit of a debacle. If you missed it or you just tuned out because I wasn't sharing the screens, there is an edited version up on the YouTube channel, but I do appreciate everybody alerting me to the fact that the screen share was not working. Let's do this. As per usual, live chat is open today. So if you've got comments, if you've got questions, if you've got insights you want to share, I want to hear them. I love engaging with you guys. Quite frankly, it makes for a much better stream when you do. If you haven't done so yet, do us all a favor and smash the buttons. Hit the like, hit the subscribe. That's the little bell up there in the corner. So you don't miss any of the future streams. And, if you want to chime in with me here and engage with me here, I love to engage with your comments. If you're watching the recorded version or you're watching on the X platform and you can't comment in the live chat, leave a comment there. And I promise you, I will engage with those later in the day. So what do we got going on today? It seems to me that Bitcoin might be defying gravity, might be defying sentiment, might be defying economic data. We could probably argue those things, but one thing we can't deny is what's happening in the order book. So we're going to look at a couple things across the board, but definitely going to keep the focus of this on what's happening in the order book because there's some liquidity movement that I think you will find insightful. Before we get to that, I want to let you guys know, if you're not already, that we are having a sale. Material indicators, 25% off Premium Plus. That gets you access to fire charts and all the stuff in the MI dashboard that I share with you guys from time to time. You will find a link to that on X and also a link in the description of the video here. So if you miss out, you can always go back and find it. But yeah, it's right there on X. You can see it loud and proud. Also in our Telegram group, man, great discussion today on something I shared earlier from Ray Dalio. I've talked to you guys about Ray Dalio's kind of take on things quite a bit in the past, or the past few years, and I've been following along. And he posted something today, and let's be clear, yes, he is marketing his book. I get that part, right? But what he's saying and what he's telling us, I think, is pretty insightful as well. If you did not catch that, I've got a link to it on my personal X channel. You can find that. KA Productions, at KA Productions is my handle over there on X, and you can see what he's talking about here is that we're in a changing world order. We've talked about this on Blockchain Banner a couple of times, that it seems that the world order is changing, and the United States has been the dominant nation in the world economically and with the world reserve currency since it's been 80 years or so. I don't know, since World War II, however long that's been, and that's changing now. To be fair, I think that we are on a trajectory for that to change already, and I think that Russia and China have been, how should I say, collaborating to help accelerate that a bit. Really, since we saw that strong alliance formed back at the Winter Olympics, I think back in 2022, I think it was, and that was just before Russia invaded Ukraine. So that's been kind of a work in progress, something that takes time. But according to what Ray Dalio is saying here, tariffs have accelerated this, and we may actually be at the point of no return because U.S. companies are already trying to make plans and accommodate for what's happening or what could potentially happen with tariffs. Now, whether Trump rolls things back or not remains to be seen, and whether they can react in time is also another issue. So the ball is rolling on that, and it's not looking great. We've had an interesting discussion in our Telegram group, and if you haven't joined that free channel yet, I encourage you to do so. You will also find links to that in the description of the video. So now let's get into charts and see what's happening here, right? So first and foremost, let's go ahead and look at the Bitcoin chart, and we can see that price is now well above the 2025 open, coming off of a nice long signal on trend precognition here. And so where's the next resistance, and what could potentially happen here? Yesterday we talked about and yes, look, I'm actually sharing the screen. Good move, Keith. Yesterday we talked about the volatility that is expected coming into the end of the month, right? We often see volatility around monthly candle closes. We see it around economic numbers. We see it around FOMC and Fed events, and we have all of that happening in the next week or so. I think obviously tomorrow's the last day of the month. We have economic data coming out every single day, including some that came out today that, quite frankly, was not very good, in my opinion. And so I'm a bit surprised how markets have responded to this, because it looks like all markets are up today, despite these reports. Are they up because they think this gets us closer to a Fed rate cut? Gosh, I'd be hard pressed to say yes, to answer yes to that. And if you look at the CME survey, it looks like no. 92% of the market surveyed believes that there is no cut coming here in May. Potentially, we could see one in June, but as Fed Chair Powell has said, so much uncertainty around tariffs, it's difficult to make that decision and make that determination without having more data. And that's, a self-inflicted wound. We might have been on this trajectory to go ahead and see a cut already if we didn't have this tariff situation happening. So nonetheless, the goods trade balance, that was a miss by a long shot. Retail inventories, maybe not so surprising here, and that maybe some stockpiling before tariffs come in. And today there was some relief announced on cars for auto manufacturers on tariffs. Red Book year over year, that's down from last month. The home prices are down. The job openings, they are down. Job quits are up. I mean, all of this is not painting a beautiful picture. Tomorrow we'll see mortgage rates, and mortgage rates have not come down as most people had expected at this point. So it will be interesting to see what happens here and if there's anything significant. But more importantly, we have ADP numbers and GDP numbers coming out tomorrow, as well as PCE. And then as we cruise through the week, Thursday, first of the month, right? So tomorrow we're going to have all of this data, all potential catalysts for volatility, and we're going to have a monthly close, another potential catalyst for volatility, and whatever blurbs come out of the White House as potential catalysts for volatility. Maybe it was that easing of auto tariffs that kept the market positive today, and I think that China actually rolled off some tariffs on certain items as well. As we move through the week, though, we have more pretty critical data coming in on Thursday and Friday, including non-farm payrolls and unemployment rate. Those are big ones that the world would be watching. Fed watchers certainly in tune to that as well. And of course, then next week we get into FOMC meetings and the Fed press conference. Again, nobody really expecting a rate cut at this point. The question is going to be how is Fed Chair Powell going to respond to questions? He's been very diplomatic. He walks the line, trying not to upset the market, and at this point, trying not to upset the executive branch either. But pretty interesting how he has been able to hold his line and not buckle under the pressure that he's getting from the White House. So I applaud him for that. Nonetheless, right, all of these things are potential catalysts for volatility. And so then we have to look to, another interesting thing is nearly 1 billion in inflows just to BlackRock yesterday on BlackRock's Bitcoin ETF. That's just monumental, right? There has, I mean, you would think there has to be a push, them pushing their clients to load back up on Bitcoin while other entities were offloading. So interesting. Net a day of 591 million for the group, but nearly 1 billion in inflows for BlackRock's IBIT. So what does this mean now? What does this mean for Bitcoin price? Well, this you would expect to push price a bit. And granted, much of this happens over the counter, I think. So maybe we don't see that directly pushing price in the order book like we might expect. But what it does show is demand, because BlackRock has to back all these ETF orders with physical Bitcoin. So there is some buying going on. It's just not market buying happening on the exchange like most of us do, and that's why it maybe isn't pushing price as much. But it is going to have an impact on supply and demand, right? So that's been a big discussion and a big narrative going on. Now, as we look at how things are sitting in the order book, we can see that price right now is pinned between two sizable blocks of liquidity here. And if we zoom in to lower time frames, we can see kind of the nuances that are happening here. And we can see that we've had a new block of bid liquidity show up today. And this came in earlier, much earlier today. This is basically defending the yearly open. 93.3 was the, or 93.4K was the yearly open. This was a level that we had been trying to RS flip for a while. At the moment, we're above it. Can we hold above it? That remains to be seen after we get through all of this economic data and monthly close and Fed Chair Powell's speech next week. Then I think we'll start to see things take a little bit more, how should I say, take shape in more of a realistic manner. Now, where we end up remains to be seen, but at the moment, this is serving as plunge protection and guardrails. And if you've listened to the stream for a while, you've heard me say things like liquidity dampens volatility. Well, yesterday we were talking about potential volatility, and before we got to this, I was showing you all the things that could be potential catalysts for volatility. Liquidity can dampen volatility, which means that if this stays in place or we see more coming into play here, between this range and this range, or this range, or even wherever it is, that will mitigate some of the volatility, limit our downside potential, limit our upside potential, right? Depending on what is there at the time, the inflection point, if you will. So let's look at some notable things, though, right? Where is liquidity moving? How are things trending? Where is it, how should I say, eroding from? Well, we had quite a bit up here before, and it's you see it started stepping down a bit, and it's now concentrated at one level. So a significant amount of what was up here has come down lower into this range, into this 95, what is this, 95, 90, 96 range. And that at the moment is looking like about 65 million. Meanwhile, to the downside, we have 42 million in this 90, stacked above 93.5. And so historically, the brighter spots win these battles, but we can see that, at least until they don't, right? At least until there's enough sentiment and enough buy pressure to eat through that. Well, there has been some selling, but as you can see, price has held very, very well, right? Just in the short term, we can see that purple whales have been selling. Most classes have been selling here over the past 24 hours, but price appreciating, hanging on. And why is that happening? It's happening because we saw bids moving up to hold price in place, so that when the sellers were coming in, it was getting absorbed by bid liquidity. And that has continued so far. Now there's a bit of a gap here. You can see some voids here, where price could slide, and price could slide very quickly. If we get down below 95, price could slide very quickly back to 94.5. And if you break that, I mean, there's only a few million bucks there. It could slide very quickly back to 94 and then start, testing this. I have to wonder if after tomorrow's close, this block at 93.5, whether it will stay or not, whether will it stay here or will it move up higher and try and push price higher into this, basically breaking this 96K range into where the next resistance is. So where is that next resistance? Well, I'm glad you asked. Well, it was a hypothetical ask, right? That next resistance is at a level that is related to timeframes. This is something we've been working with lately. It's a new indicator called Timescapes, and it is basically marking quarterly opens, quarterly closes, yearly opens, yearly and quarterly opens, and first week of opens. And those have, as we can see historically, provided some decent levels of resistance and support. So as you can see, we've just recently flipped this. This is literally our first daily candle above it without a wick below. So I want to see more of this without wicking below. These wicks make me feel like we could go back down and retest support. But we're going to run into more resistance here at this 98K level. And then we have psychological resistance at the 100K level. So I think there's a lot of resistance in this area before we have a chance to break back through. Maybe even a little bit here at the 0.618 fib, which is near range. That's at 96K. So if we look back on fire charts and we go into this lower resolution, we can see the higher resolution on a daily chart. We can see that we do have liquidity stacked, about 11.5 million stacked at 96K, trying to hold Bitcoin into this range between the fib levels, right? In the golden pocket, if you will, right? So that is between the 0.5 and the 0.618. So we have some technical resistance here, some fib-based resistance. We have some time-based resistance here at 98. We have psychological resistance here at 100. I mean, we got something for everybody in this in this chart right here. So I'm mindful of that. I have been taking incremental profits along the way on these key resistance levels, just in case we see a mad reversion, and then I have a chance to buy back in cheaper. But it seems like there's a lot of conviction for this move. I just have to wonder if some of this is related to kind of positioning for the monthly close. So I will wait to see how things close here on the month before I start pushing buttons again at this point, right? Whatever I have set, and it's going to do what it does. And in case you're wondering, this fib channel is based off the all-time high down to the swing low we recently had around 74 and change. So this is a fib retracement here. We're in the golden pocket. Breaking this 618 gives us a chance to go higher. Again, resistance here at 98, psychological resistance at 100, and then maybe we get to consolidate up here. I want to see a consolidation above 100K before we rip up through this, right? I want to see, we've never had it. We've never had any real successful consolidation above 100K. There was always, they were short-lived, right? We had wicks below, a few days up above, and then things came crashing down again. So we need to see that before we can have confidence that we're back on the right trajectory. And I have to wonder if this really, this ranging, this sideways chop goes on for a while, at least until we get this tariff situation settled, right? Like what's it going to be? Give the market some clarity and some certainty, and we can work with that. But until that is done, I think it's still a risk-off situation. I mean, the reason we're seeing some buying happen here in crypto and on TradFi is things got into good sale prices. But the reason we haven't seen everybody ape in and a V-shaped recovery is because there's still uncertainty, and that uncertainty favors a risk-off environment. So either clarity on the tariffs and policy, or a change in fiscal policy where we see QE come in, that's what it's going to take to really send things soaring. And we're just not there yet. So back to fire charts here. Again, I want to show you what's moving in the order book here, right? So you see this bit of a pull here obviously opens the door for more downside, and we can see some selling happening as we speak. But overall, it looks like we've seen kind of a combination of bids moving higher, and you can see it, right? Let me do some apply some filtering here to make it even easier to see. Okay, so bids stair stepping higher from here, higher, higher, higher. Double stack of bid liquidity right here today, which is holding things in place, keeping price elevated. And you can see a stack came in here. It's now gone. I don't like that it disappeared. It doesn't. Let's see if we can see if it went into the. Hard to tell from this. I don't know that this actually moved up or necessarily turned into a market order from here. That was what, about $5 million, $4 million, not a ton. So this isn't great to see. But what is good to see is that things are thinning out up here. Things are actually moving up a bit. I think I saw a block move up to like the 105, 106 zone. So yeah, see up above. So some of this bid, some of the ask liquidity is floating higher as well, right? Which is sentiment that price will go higher. So as long as we have more buying going on, and I know that this looks bad here on the daily, right? It looks pretty rough seeing all this sell pressure happening. You're like, oh, whales are selling. Well, you can't really define a trend on one day of activity. But if you zoom out a bit, you can see that, yeah, there's some profit taking here, but they haven't dumped a lot of what they bought in the last month. So all in all, whales are net positive here on what they've done here since early April here, when we had this kind of double bottom situation around the low 74s. So as you can see again on this view on the monthly chart, you can see that some of this ask liquidity above has eroded, and that makes it easier to penetrate. So it doesn't take a lot more. It doesn't take a ton more bid liquidity to come in down here to push things up. And it's going to come without notice, right? When it happens, and things will move. So as you prepare for what's coming ahead, again, this liquidity could dampen the volatility a bit, but you see plenty of voids where price can move quickly and easily through in both directions. So I would say be prepared for those moves and know what you're going to do in either direction. And then when it's happening, don't get in there and second guess yourself. Look at the charts, place your whether you're looking for buy orders or DCA orders or stop loss orders to the downside, or whether you're looking for take profit orders or breakout orders or short orders from the upside. Pick your targets now and set those orders and just let them play out as the market plays out. I can tell you that yesterday I was thinking I might close some positions because I felt like we were gonna dump. That was my sentiment. I'm glad I didn't, because they're still hovering in place, and we had this new bid liquidity come in today to keep things elevated. So I'm just going to let things play out as I have them set, and I will reevaluate after the monthly close to see if we get any new trend precognition signals, any other indications that that we might expect price to change. So in terms of what that looks like briefly, I can show you, we're obviously coming off a long signal on the daily here. And it looks like that momentum looks pretty good here to continue tomorrow. On the weekly time frame, momentum maybe shifting a little bit, maybe starting to shift here. Again, we'll see what happens after the monthly candle close, and that's where I'm going to be looking for new signals, either from the A2 plus algo up here, up top with the arrows, or down here with the A1 algos. If this A1 slope line ticks upward, crosses this center line, we'll get a new A1 signal down here as well. So lots of things to watch and stay in tune to as we move through the monthly close and the week's worth of economic data, and of course, next week's FOMC rate decision and Fed Chair Powell speech. Gonna wrap it right there, guys. Again, I appreciate the ongoing support, and another reminder: if you're interested in picking up any of these tools, like Fire Charts version 2.0 that I've been sharing. The MI dashboard comes in this premium plan, and lots of metrics in here as well that you might find helpful. I definitely encourage you to do so. 25% off. You'll find the promo code linked in the description. It's also on the X channel. And while I'm here, let's look at something here. This is the relationship. This is beta of Bitcoin to alts. And as you can see, low beta is on the rise here. And historically, when that happens, when we get this low beta peaking, we get near local tops. And sometimes we even get blow off tops. Now, what happens after that can change. But if you're looking at shorter time frames, these are things to watch and stay in tune to as well. As you can see, when we have high beta, as we did here recently, that's when we find local bottoms, and this marked beautifully here, as it did on previous occasions. So now wondering if we get in this situation where things get a little toppy, and maybe we chop for a little while before a retest of support. So really a bunch of different metrics in here that you might find helpful. All of this and a whole lot more coming with those Premium Plus plans. If you're interested, promo code is in the description of the video, and you'll also find it on the Material Indicators channel on X. So with that, I'm going to wrap it, guys. We will be back at it again. Hope you enjoyed the stream. Hope you're getting some value out of this. If you are, do me a favor, leave me a comment. And thanks to you all for helping me grow my YouTube channel as well. It's slowly but surely starting to gain some traction, and that is greatly appreciated. Thanks again. Thanks for the ongoing support. We will be back at it again. I'm going to leave you with a parting shot of the order book here with Fire Charts. And again, if you want that, take advantage of that deal. It's going to end tomorrow. 25% off Premium Plus plans for Material Indicators. Have a good one, guys.